It's not saying it because it's already recording. Great. Well, I want to welcome everybody. Tonight, we're going to be talking about how to buy a house. Let me just see. All right, there's. Okay, just making sure everybody's here. So we're talking about how to navigate today's market and to successfully buy a house. Those of you that are agents that are on this call will be given an opportunity to have copies of this, which you can then, modify if you want. And for those of you that I haven't met, my name is Michael Devlin. I'm a real estate broker affiliated with eXp Realty. I have a large team of agents throughout the state of California. And so what we're going to talk about is how to navigate buying a house in today's market. And there's going to be a discussion of the impact of a commission lawsuit settlement that you might have heard about, because there's a lot of information and disinformation about what effect that has, and are there going to be buyer's agents and all that other kind of stuff, right? So we're going to see if I can get this to go. All right. So what are the steps in the home buying process? The first one is you have to decide you want to buy. We're going to talk a little bit about why you might want to buy a house. But this is one of those games that if you don't play it, you're never going to win. I guess that's every game. But you have to make the decision and go through the steps in order to be ready so that you can buy a house when something comes on the market that fits what you're looking for. You have to have an agent to do it. That would be highly recommended. We're going to talk about buyer representation, but there are a lot of properties you won't see unless you have somebody representing you and looking out for you. You need to determine what you can afford. That's what Jody's going to be talking about in the second half, about loans and pre-approval and all of that. Most sellers won't even talk to you unless you can prove that you can afford to buy their property. They don't even want to see your offer unless you can prove that. And you have to determine what you can afford. You have to make a list of what you're looking for. What are your wants and what are your needs? Those are two different things. Many of us want things that we don't need, at least I do. Then there's the home search process, and we're going to talk a little bit about how you can maximize that to help you get a good deal when you're buying a house. You write an offer. If accepted, you'd be conducting inspections and getting an appraisal unless you've got all cash, at which point you're going to be able to close the transaction. Yay, you get the keys, you move in, happy, happy, joy, joy, right? So why do people buy houses besides what might seem obvious? It's a bigger place to live. You can paint it just about any color you want, at least on the inside. But one of the things that motivates people is a predictable monthly housing payment. You're going to see if we look, when we look at renting, well, anyhow, we'll get to each of these. Another reason that people would want to buy a home rather than rent is because of the appreciation. And that's connected to equity building, because the equity building is going to allow you to buy another home, to buy up, or to even get a loan against it to do something fun. There are tax benefits in that the mortgage interest deduction, so the interest that you're paying on a loan up to a certain amount, I think it's $750,000, is tax deductible. Property taxes that you pay are tax deductible. There are some tax benefits. We're going to talk about the capital gains exclusion, which is a way to make money, get the money in your bank, but not have to pay taxes on it, which sounds like a great idea. And of course, if you have equity, you can get a loan against your equity, which means you could do other things, that you could buy that boat that you've always been, the yacht you've always been dreaming of. So what about a predictable monthly housing payment? So people say, well, I think I'm going to rent, that's predictable. Well, this is what historically has been happening with rents in the United States since 1988. They noticed the upward trend, right? And even with rent control, under most rent control, the state rent control, your rent can be increased by as much as 10% a year. Some localities have different rent control amounts, but it's not stable. It's going to go up. As you can see, it goes up a lot over time. The appreciation is one of the reasons that people buy houses. And by the way, for condominiums and townhomes, they appreciate also, you'll see that. How much did housing appreciate in California? If you can see the number here where it talks about median sales price, year over year for February of 2023 to February of 2024, properties appreciated at almost 10%. By the way, historically in California, most properties double every 10 years. It's essentially about a 10% a year. It goes up, it goes down, but over time, that's sort of been a rule of thumb. Unsold inventory means how long would it take us to sell all the homes we currently have? 3 months. By the way, most of the people that are pontificating about this think that a normal market is 6 months of inventory. And in California in February, the median days on market, that's the time from when the property was listed until it sold, was 22 days. These numbers vary a lot depending upon the zip code, the neighborhood, the price range of the property, but just, just in general. In terms of San Francisco, you can see SFR, I'm about to say San Francisco. How about single family residences versus condos? And in most of the areas, a townhouse is classified as a type of condominium. You can see 9.7% was single family residences. There's also the dollars per square foot, which gives you sort of a control because it's taking into consideration the size of the properties. Condominiums, people say, oh, they don't appreciate as much. Yeah, only 7.3% year over year, which is, still not too shabby. And you can see it breaks down. There's a big difference in the far north. It only went up a little bit, and even went down for condominiums, but San Francisco Bay Area, 22%. Yay, San Francisco Bay Area, right? In terms of the year over year median price appreciation. I guess what we're saying is buy land. They're not making any more of it. And because there's a limited supply, there's demand, and the result of those two factors is that prices go up. So let's say you're to buy an $800,000 property, and the annual appreciation rate was 5%. By the way, historically, throughout the United States from the 1970s, the overall appreciation rate is a little over 4%. But we're in California, right? So we're special, and ours is generally higher. And in some parts of California, it's super special. But assuming a 5% appreciation, which would compound, so if it went up 5% one year, the next year it would be 5% of what had gone up before. It would compound. And the value after 5 years would be, well, a little over 1 million. And I see some people are posting in the chat, if it's something really important you want me to talk about while I'm doing this, you're going to have to speak, because I'm not going to look at the chat till the end. Right? I'm just saying. Maybe it's somebody posting in the link to the handouts. I don't know. So how much equity would you end up with after 5 years? And the answer is over 226,000. So one of the questions that I would always ask if you're thinking about saving money, well, I'm going to rent because the rent may be a little bit less. And what is the likelihood that you're going to be able to save $226,000 in 5 years? Putting money aside, not going out to dinner, no more Starbucks, right? No more Starbucks, right? You're going to be buying, great value instant coffee because you're saving all your money, right? So in some ways, real estate is a forced savings account in that you buy the property and it goes up in value. The monthly appreciation in this example is over $3,700 a month. So when Jody is talking about what a monthly payment might look like, you should also take into consideration that the property is going up in value. a lot every month. And it's compounded because every year, every month, it goes up again, right? Because it's based upon the amount of the first one. One of the other reasons that people are interested in buying houses is because there's a capital gains exclusion. And the requirements for you to take this is, first of all, you have to, if you're married, which means filing a joint return, you get a $500,000 exclusion. If you're single or just filing a single return, it's a $250,000 exclusion. You had to have owned the home for 2 out of the last 5 years and used it as a primary residence. How do they know that it's your primary residence? It's what you put down on your income taxes. 2 out of the last 5 years. It doesn't have to be the last 2 years. Technically, it doesn't have to be 2 years in a row. And the most you could do this is every 2 years. So you could buy a house, wait 2 years, sell it, take the exclusion, buy another house, wait 2 years, sell it, and take the exclusion. It only applies to gains, not losses, which means if you lose money, you don't get to deduct that. But if you make money, then it's going to go up, right? You're going to get to use the exclusion. And it's good to keep records. I have people say to me, well, you know, because its basis is what you put into the property, which includes any capital improvements. And I get asked this question, well, do I need to have receipts to show that I made these capital improvements? And my answer is no, the IRS, they're going to trust you. They're those kind of people. They'll take your word. Of course you need proof, right? If they come looking, they want to see records that you made these capital improvements. So 5 years, 2 years used it as a primary residence. Doesn't have to be the last 2 years. Doesn't have to be 2 years in a row, just 2 out of the last 5. So what does this do for you? Well, you get a $500,000 exclusion if you're a married couple filing a joint return. Using our example, let's say you paid $800,000 for the property. After 5 years, it's gone up to 1.2 million. That gives you a capital gain of $400,000. But the exclusion is $500,000. 400,000 is less than 500,000. What that means is that you can sell the house, you can put $400,000 into the bank, you can spend the money, you don't have to invest it in another house. There used to be a rule that said in 2 years you had to roll it over into another primary. That went away in the 1990s, long time ago. So you could use the money to buy another house, but you don't have to use the money to buy another house. So in this case, they put $400,000 in the bank, but they didn't have to pay any taxes on it. $400,000 tax-free in the bank because of the capital gain exclusion. And if you've been renting, now you know why people like to buy houses. Finding an agent, right? Don't go out without one. So you may have seen on the internet news articles about, you know, the real estate world has changed. It's never going to be the same again, that the 6% commission is gone, buyers agents are gone, you know, all of this stuff. And you know what shocked me when I started seeing these articles is I realized for the first time that not everything you see on the internet is true. I don't know if that's ever occurred to you, but a lot of it is not true. So first of all, the 6% commission is gone. It hasn't been 6% in a long time. By long time, I mean decades. It's been a long time. The average commission is about 5%. It's not set. Real estate agents didn't set the commission. It varies widely between properties and areas. It's not a set amount. But what happened was that there was a settlement with the National Association of Realtors, NAR, and a lot of the major real estate companies, which are members of the National Association of Realtors. And the two key changes are that there's going to, and this isn't going to take effect until July of 2024, but the two key changes are there's not going to be in the multiple listing service, the MLS, a statement of broker compensation to a buyer's agent. Right now, if you are buying a house and you have an agent helping you, it says in the multiple listing service that your agent is getting a certain percentage. By the way, it says it on Zillow, it says it on Realtor.com, it says it on Redfin. This is not like a secret. I also saw articles that said it was a secret. I don't know, it's all over the internet, but it is. And so the listing agent and the seller would say, if you represent a buyer and you sell the property, this is how much we're going to pay you. That is no longer going to be on the multiple listing service. Does that, well, I'll get to that, right? And the other change that's going to go into effect in July of 2024 is that there will be a requirement that the buyer have a written buyer representation agreement with an agent before they can look at houses, before they can be shown houses or given a tour of houses. They haven't figured out, does this mean open houses yet? More to come. There are changes in how agent commissions are set and paid. Now, notice I didn't say in what agent commissions are. This isn't really a change of what, it's a change of how. And there may be more transparency for home buyers. You could see it on Zillow today anyhow. However, there would be a written agreement before you look at a house that would actually spell all this out. It's still subject to court approval. The National Association of Realtors said we didn't do anything wrong. And nothing has changed. So right now, between now and nothing has changed. Everything today is the way it was last week, last month before this happened. Nothing has actually changed. What it did not do, and this is where I see a lot of misinformation. It does not mean the elimination of buyer agents. It does not. Over 90% of all real estate transactions involve an agent representing a buyer and not the listing agent, over 90%. Sellers want buyers. Buyers want agents. So does it mean that sellers are no longer going to pay buyers' agents? No, it doesn't mean that either. Right now, a seller could say, I don't want to pay a buyer's agent anything. They could put 0 in the multiple listing service. They don't do that. They don't do it. There was a multiple listing service in Oregon that 8 years ago changed the rule and said you could put in 0, if you want to, for the buyer's agent, and it had no effect because sellers are motivated to have buyer's agents cooperate and show the property. By the way, new home subdivisions will pay a commission to an agent who finds a buyer, but they're not in the multiple listing service and they don't have to. In commercial real estate, they don't use the multiple listing service. There's nothing that says buyer's agents get automatically paid X amount of a commission. It's negotiated, but almost all sellers pay a buyer's agent a commission. Even for sale by owners who aren't in the multiple listing service and they don't even have a listing agent, most of them will pay a buyer's agent a commission if you have a buyer. So the idea that sellers will not pay buyer's agents as a result of this rule is probably not true, right? There's lots of evidence that that's not going to change. It does not mean that there's going to be a drop in property prices. It's called supply and demand. It's really about supply, not demand. Really? Well, when interest rates went up from 3% to 7%, you would think that would cause a drop in prices because it would have an effect on demand, and prices went up anyhow. Not as much, but they still went up. Well, why did they go up? Because there isn't enough inventory. So if a seller is pricing their property, are they going to say, well, you know, I think it's worth 900,000. I mean, the last one sold for 900,000. Mine looks a little bit nicer. I believe 900,000, but I'm going to charge less because I'm going to pay the buyer's agent less. No, the sellers determine the price based upon the market. The 6% commission is gone, the commission has changed, it's going to be, the settlement doesn't say anything about the amount of commission. It doesn't regulate it, it doesn't talk about it. All it says is that it can't be on the multiple listing service. That doesn't mean that the listing agent can't have a website with their listings and say, this is how much we're paying to a cooperating agent. It doesn't mean that the brokers can't have a website and say, this is what we're paying to cooperating agents. The listing agent could have a voicemail when you call them and ask about the property that says, this is how much we're paying a cooperating agent. They could put it on marketing materials. They just can't put it on the MLS. That's it. Right, that's the big change. But by the way, it's okay for in the MLS for the seller to say, I'm willing to give a concession of a certain amount. All right. So why have a buyer's agent? One is access. In order to see properties before the weekend when the open house is, you need somebody with a lockbox key, and a lot of times listing agents don't have the time or inclination to do it. Also, there are some that are not publicly available. You want somebody to represent you in negotiations. You want somebody that knows what's going on, and it's going to save you a lot of time if you have somebody that's actually working on your behalf. So we can, by previewing properties before you see them, weed out the ones you probably won't like, take a video tour of them. We can do a market analysis of all the properties so you can tell if they're a good deal or not. And by the way, when we do find good deals, good buys, we sell them to the clients that we have a relationship with first, which is why it's good to have an agent, have a relationship with one. We would give you access to other properties, exclusive listings, which by definition are not on the multiple listing service, which by the way, the best deals are. They're not in the MLS. You're not competing with a bunch of other agents. I have a general rule, if it's easy to find the property, there's going to be competition. Also, agents network, and sometimes the agent knows somebody who's got a property that they're putting on the market. Insights about the market, and we find out that properties are coming on the market before anyone else does. Off-market opportunities through our connections, and we can use searches that can go beyond what Zillow could find for you. An example is eXp Realty has a pool of exclusive listings. These are off market, which means not in the multiple listing service. It's a private platform. So our buyers can get access to properties that other buyers don't know are for sale. Why do sellers do this? Because sometimes they don't want people coming to the property and traipsing through it and all of that. It's a unique service that we have. What about finding a home? This is another reason why sellers like to cooperate with agents. In 2023, the survey of buyers and sellers, 47% of the buyers found the home they bought on the internet, but almost 30% of the time the agent found it. They didn't find it on Zillow, the agent found it for them, 30%, 29% of the time. That's a lot of properties. And if you don't have an agent, you're not seeing those properties. We also can find non-MLS properties. We could find new homes that match the criteria. Targeted off-market sellers. If somebody says, well, I'm interested in buying a condominium that I can use for an Airbnb, and this is what my budget is, and this is the area I wanted, we have the ability to identify all of the people that own properties in that area that fit that criteria, and systems to reach out to them to see if they want to sell. For sale by owners generally will pay a commission. We'd be happy to talk to them too. I've sold properties that were for sale by owners. The owner didn't have an agent, but I had buyers that bought it. And distressed properties are properties that are in pre-foreclosure they're not on the multiple listing service, but something's going on, right? Because they're not making their payments and they're going to lose the home if they don't do something. So you need to act fast in our current market. Don't wait for the open house. If the system that you want to use is, I'm going to use Zillow, and I'm going to look every day, and I'm going to mark the ones I like, and then on the weekend, I'm going to go to the open houses, you're never going to get the best deal possible. Because first of all, a lot of them aren't held open. And another thing that you'll see is that right before Saturday, a bunch of the open houses get canceled. Why? Because they were a good deal. Somebody saw it and they went and looked at it before the weekend and made an offer, and it was accepted and it left the market. So if you only go to open houses to see property, you're getting the leftovers, the ones that didn't sell during the week. The best ones, the good deals, sell during the week. You need to respond quickly. If you make an offer and they counter you back, I've had people say, well, we want to think about it over the weekend. They can revoke their counter offer anytime they want to. And while you're thinking about, maybe let's talk about it, let's talk to the uncle and see what he thinks, you'll get a message that says, forget it, we've decided to go with someone else. You have to be prepared to act fast. That means you need your financing in order. You should have your own agent. The agent who's listed the property works for the seller and is legally obligated to negotiate the highest price possible under the best terms possible. There have been studies done of buyers relocating across the United States, and there aren't a lot. Most buyers have their own agent, but they found that buyers that bought property through the listing agent on average paid 5% more than the ones that had their own agents. It can cost you to think of it this way. If you were getting divorced, would you use the same attorney your spouse was using just to save money? Why have two lawyers? They already have a lawyer. We'll just let their lawyer do it. What your agent can do is negotiate the lowest price for you. They can keep your information confidential. If you tell the listing agent any confidential information, they're obligated to tell the seller. They can give you advice and counsel. They can give you a competitive market analysis so you know exactly what the property is likely to be worth. Well, maybe not exactly, but you don't want to overpay. If you are working directly through the seller and the seller's agent, you're a customer, you're not a client. Many listing agents won't do dual agency because it increases their legal liability. They don't want to represent you. That doesn't mean they won't write up the offer, but they make you sign a form called buyer non-agency that says, I'm helping you, but I'm not your agent. So you can see this is out of balance. You're the buyer, but the seller is got an agent. You're outnumbered. You're a customer. Now, if you're a client, that means you have your own agent. Now it's balanced in that both buyer and seller have an agent that's representing them and working on their behalf. So your agent will share with you whether or not the seller would take a lower price. They're obligated to. They work for you. They would try and find out, why is the seller selling? When do they need to move? They would look at how long the home has really been on the market, because sometimes they do things to make it look like it's not as much on Zillow and other platforms. They would try and find out what happened with previous offers and counter offers and what are the strengths and weaknesses of the property. So if you're looking at what, because I have people say, well, why don't I just go to the listing agent, let him write up the offer, and, won't that be easier? Well, there's something that the seller's agent could do that your agent could do. They both could arrange for showing the property, although the seller agent only wants to show you that one. They could assist with financing. They could give you information about the property. They could explain the forms. They could monitor the closing. And in either case, the fee could be paid by the seller. But if you are looking at what your agent can do that the seller's agent cannot do, your agent can give you advice and counsel. Remember, the seller's agent works for the seller. Keep your position confidential, negotiate price and terms favorable to you, give you reasons why you might not want to buy this house. That listing agent is trying to sell it. Honestly evaluate the property value without obligation to the seller. So the listing agent may not include comparables that would tend to indicate the price was too high, and might only want to show you comparables that justify the price that they want. Your agent could disclose confidential information about the seller, write the offer to your advantage, find other homes, expand it. The listing agent only wants you to buy their listing. They don't want to necessarily find out other properties for you to look at. And if you're working with an agent, that's where the greatest agent commitment can come from. It can't come from the listing agent because they, by law, represent the seller. Oops, that was not necessary. So negotiating the offer, how much? Some you have to look at value because some are deliberately low so that they can sell it high. Some are overpriced. It takes time. You need to determine how much you're going to offer based upon what other homes have been selling for. These are some of the questions we would ask. How long has it been on the market? Why are they selling? You want to, the things that you have to think about is how much are you going to put down as an initial earnest money deposit? How the down payment and financing details, closing date, price, all of that. The earnest money deposit is typically 3%. No law says it has to be, but that's typical. If the offer is accepted, it's part of your down payment. It's not in addition to the down payment. If the offer is rejected, the money actually doesn't even go anywhere. You don't do anything unless it's accepted. But if you back out and you don't have a good reason, you might forfeit your deposit. There'll be inspections and reports. If the seller doesn't have them, you're going to want to get them. And if the seller does have them, you might want to know, why did they pick these inspectors, right? That sort of thing. There are contingencies that you have to take into consideration. Is that a contingency is a only if. I'm willing to buy your house, but only if I can get a loan. I'm willing to buy your house, but only if it appraises. I'm willing to buy your house, but only if the title is clear. I'm willing to buy your house, but only if the inspections don't scare me and the condition of the property is acceptable. Now, the more of these you can remove, the better of a deal you can get. So our goal in representing buyers is to find you the best house, negotiate the lowest price, and do this with the least amount of hassle. And that's what I look like according to artificial intelligence. You can see it looks just like that. And so that's what I've got. Let me see what the one comment is. Jody, thank you very much. So what I'm going to do is pass it over to the interesting part, which is Jody Hatano with Rocket Mortgage, who's going to talk about financing. I didn't do too bad. You can have an extra 6 minutes.
Just fine. Let's see.
And
okay, so I'm gonna. Great, that was great. And I want to just piggyback on one thing that you mentioned, especially for any of you that are on this call that are actual home buyers, not just real estate agents. But one of Mike's agents helped me buy my house a couple of years ago now, and that was an off-market purchase. So had I not worked with that agent, I would have been in the house that I'm in right now. Never would have gotten it off market. I didn't have to compete with other people. So not only was that a life-changing decision that my family and I made to work with this person, and I don't think she's on the call, Monica. If you are, hello, thank you again. But there is, amazing benefits to working with a real estate agent and having that representation and protections for you. So if you're a home buyer and you're just kind of getting started, and there's a plethora of agents on this call, of course, and Mike can also help you with, getting connected with somebody if you aren't already connected with somebody. High value in any kind of transaction, especially this kind with this kind of money that you're going to be spending. You have to have your own representation. You need that. Don't go it alone. I have not dug really deep into the NAR stuff. I was on the call earlier today so I learned some things. But don't let that worry you too much right now. your agent's going to know, what's going on. So any agent that works for EXP, I'm a big fan of. So, okay, so we're just going to jump into basically the mortgage process, kind of what to expect as a home buyer. And if you're an agent on this, of course, anytime we talk about this kind of stuff, you've got questions, put it in the chat, but you're going to learn some things. What I want to start with is asking you all a question, and this can be for agents or home buyers, it doesn't matter. Go ahead and put your answers in the chat, and then when I'm finished, I'll go back and look at some of your answers. So you've got, 20 minutes or so to answer this question. But tell me about, I would like to know that from you all individually, when it comes to mortgages, what do you wish you knew more about? If it's more than one thing, then put more than one thing. So feel free to put it in the chat. Okay, I'm gonna go ahead and get my screen share going here, and we'll jump right in. I'm kind of pressed for time here. I think we only have about 20 minutes, 21 minutes. So I'm going to kind of go a little bit quicker than I normally would. But I do have these calls from time to time. If you're an agent and you want to have a home buyer seminar call, let me know. And of course, I can always talk longer if you like for me to. Okay, so go ahead and get my screen share here. And we'll start the slideshow. And then let me know that you can see that and all as well. Okay, if you can't, then stop me at somebody. Okay, so my name is Jody Hatano. I'm with Rocket Mortgage. My NMLS number is 544400. I have been in the mortgage business for 18 years as of March of this year, and I've been in real estate overall for a little over 20 years. So I've kind of seen it all. I started before the meltdown. I was not a loan officer then. I was an assistant. I became a loan officer in 2008, fully by myself in March of 2008. And I've only really known the types of mortgages that are difficult. I never originated the easy loans where you didn't, they say, oh, you could have a heartbeat and you could have closed back then. And that's true. But I didn't originate during that time. So I've basically been a fully documented loan officer, got to know everything, got to have all your, your documents. And I've learned a lot, just kind of started on my own because I got taken advantage of at the closing table when I bought my first place. And I didn't know it until after the fact. And I said, okay, I can do this job and I can make sure that if I'm a part of your transaction, you're not going to get taken advantage of. You're going to have full transparency. We're going to have, discussions anytime you need, any question you have, any time of day. Don't ever go to bed worried. I've been there even a couple of years ago. I'm in the industry and I still stress out about my own transactions. So I know that feeling. And if I can be a part of that to ease it for you, then, I'm always honored to be. And I'm available to you guys anytime. My phone number is there, and I'm sure I will put it in the chat as well. Okay, so Rocket Mortgage, just real quick, Rocket is one of the top lenders. It is actually now the largest retail lender in the country. We're in all states. I'm a local loan officer. I'm not a call center loan officer. Rocket normally has been in the past a call center. But now for about a year and a half or so, Rocket has hired about 200 people like me across the entire country to be what I call boots on the ground, Rocket Mortgage Local. So we are in the field. We're going to real estate offices, going to closings in the event that we can, and they're in person. I'm available anytime, evenings, weekends. I don't clock in or clock out. So I am here for you anytime. I'm happy to be a part of Rocket. I've only been here for a couple of months, about 2.5, almost 3 months now. So far, I am blown away. What they promised that they said they would do, they're doing it. They're delivering. Pricing is amazing. Getting our closings done on time. We're clear to close this morning on a loan that's not scheduled to fund until Monday. So we're early, which is always amazing. And we're direct lender and servicer. So we close the loan with our own money, and then we also service the loan. Every lender reserves the right to sell servicing, but we do keep the majority of them. Been in business since 1985. We have more than 18,000 team members, very involved in the community. And we have what we call isms that we like to live by. And my favorite one being yes before no. So if there's a challenge or a loan that, might come up, or a scenario that maybe we haven't heard of before, we're going to take that and we're going to do our best to try to get it closed. If it is something that is possible, then we will do it. Exceptions, things like that. I've seen it in action already, and I'm pretty excited about, I think going into the rest of this year and into 2025, we're going to be very successful. So real quick, the agenda, and I'm keeping track on time. What would it mean for you to own a home? We're going to talk about that for a moment. Might briefly touch on some of the things, and I'll just briefly touch on a couple more. I'm going to talk really quickly about the process. Going to talk about contract to close and what it means to close. So what does close of escrow mean? What would it mean to you to own your own home? So I know I asked you guys the one question to put in the chat. If you're a home buyer or a real estate agent and you want to buy a house, please feel free to put in the chat if you don't mind, one or two things of what it would mean to you to own a home. What I think it means, at least for me, when we bought our first home together, it's of course a civic pride. So you're investing in your community that you live in. You're putting down your roots. This is not just a place where you're going to get equity and all of that. So yes, it is a major financial transaction, but we have to remember too, it's also your home. And what does that mean for you? Renting is, of course, definitely something that we have to do in the beginning stages of our lives, but you have the moment and the opportunity to own a home and you can afford it. No matter what's going on in the market, if you can afford it, it's always a good time. You have a great sense of accomplishment, a little bit of bragging rights, in a gentle way, bridging generational wealth gap. You guys already know that, buying real estate is a great investment. And a lot of families have, generation after generation of wealth that's just passed down and passed down. Well, in my community where I live, I don't really see that much. And not even for me, for my family. My family is not a wealthy family at all. Paycheck to paycheck my whole life. My parents rented most of the time. So I'm one of the first in my immediate family to be able to buy a house so that, while I don't have kids, I've got nieces and nephews, and I'm going to be able to leave something behind, have some type of, legacy that I'll leave for my family, kids or no kids, it doesn't matter. So that is something that real estate can help you do much easier and quicker than trying to, put aside a couple $100s a month for years and years and years and feel like you kind of never really get anywhere. But with what Mike went over with appreciation, you can see right there, it's a phenomenal way to build wealth. You've got stability and freedom. Mike mentioned you can paint your house any color you want. On the inside, on the outside, depending on your neighborhood, there might be some, maybe not go hot pink or something, but your neighborhood might have some rules or condo association, things like that. But you have the freedom to do, for the most part, what you want to do. This is an investment. What can you do to increase your investment? Well, you can do upgrades. You can, put in a bathroom if you need an extra bathroom. That's going to get you some equity, almost dollar for dollar. So you have control over that versus putting money into the stock market. You put it in there, and then who's in control of that? Not us, right? We don't have any way to manage that risk, really. It's just, if you've got a high risk appetite, sure, go for it. But if you're like me, I'm a little bit more financially conservative. I'm not going to put my money in a place where I don't have control over it. With being able to buy a house, you're able to budget. 30-year fixed. I'm very popular right now. I'm really trying to stay away from ARMs. I don't think they're the smartest place for especially first-time home buyers, with the ability to budget. I think someone's got their mic on. I don't know if Mike, you can maybe mute everybody. So as wages go up and your payment stays the same, you're able to budget all that additional money that you're not spending in rent, going up, and then you're not, getting anything out of that. With your wages going up, it really helps you to be able to budget and stay on top of your finances going forward. There's definitely tax advantages to owning a home with the interest deduction and property tax deduction, up to $750,000 on the loan amount. That's from the tax changes back in 2017. I must say, consult a CPA. I am not one, so I cannot give you tax advice, but you should talk with your CPA or anyone that does your taxes or a financial planner and ask them, what is the tax advantage if I bought a house? What does that mean for me? Leveraging the lender's funds as opposed to paying all cash for property, especially if you can hit the $750,000 mark and take advantage of the interest deduction. Why not use my money to make yourself more money? For example, you know, let's say you're buying $1 million property and you're going to put down $200,000. Your equity that you're going to be building over that time period is based off of the purchase price, your $1 million. Your say 5%, you know, equity, your appreciation every year is off of $1 million, not the 200,000 that you're putting in. So what's the difference of that? The difference is 5% of 200,000 per year is 20,000. I'm sorry, 20,000. Sorry, my brain just stopped. But 5% of $1 million is 50,000. So you're getting a lot more equity based off of somebody else's money. So leverage the lender. You've got all cash, that's great, but that doesn't always mean you should use it, right? There's plenty of other places that you can put cash to build wealth, you know, max out all of your 401k, open up your IRAs if that makes financial sense for you, put some money aside in other investments, CDs, money market accounts, things that you can help grow that money separately from just house appreciation, compounded interest. You can't beat that. The process. So just keep in mind, with Rocket, one of the things that we do and we do it really well and really quickly once I have all the documentation in, is we do a verified approval letter. What that means is it's a fully underwritten loan, fully underwrite credit, we fully underwrite income, and we fully underwrite assets completely before you have a contract. Some lenders do this. It's not just Rocket. A lot of them don't because it does require a lot of resources. For example, for us, if you have your application in with me by 7 p.m., that's going to be out of underwriting by 9 a.m. the next day. So we have underwriters that are working on the East Coast and they're starting at 5 a.m. So they're able to get these loans underwritten really quickly, and you're able to then go into an offer with no finance contingency. If you feel comfortable with that, there's other contingencies you can have. Your real estate agent would be the expert in how to kind of strategize with your offer for that. But the verified approval letter is amazing. We give $1,000 guarantee. So once we give that letter to you, if we can't close for something that has to do with your credit, income, or assets, then we will pay you $1,000. I don't believe we've had to pay that out yet. So it is something that we, you know, feel strongly about, and my team does an amazing job with the verified letter. Beginning of the process. Here's some things to be prepared for. Make sure that you've got your pay stubs handy, at least 30 days. So there are some rules in place that say pay stubs can't be older than X date of the application. So we always just say, what's your most recent 30 days pay stubs? Get that into me. And as we go through the process, all you have to do is every time you get paid, just upload that new pay stub, upload the new pay stub. That way, when you do go under contract, we have everything we still need. Nothing is left, and we can continue the process quickly. W-2s from your last 2 years, keep those handy. You usually have those electronically accessible from your current employer or even former employers. So keep those saved in a folder. I personally ask for the end of year pay stubs as well, because I like to see the breakdown of income, different types of income, whether it's a salary or hourly, variable, is underwritten a little bit differently and calculated differently. And it also depends on what type of loan you're in. So having those end of year pay stubs, while not required, for me, it helps me do a much better job of calculating your income perfectly so that we don't have any surprises. Tax returns are most of the time not required unless you're self-employed, or meaning you own 25% or more of the business, or Schedule C, but that's usually within your personal tax returns. If you are a commissioned employee and the majority of your income is commission, 25% or more, then we need tax returns to see if there's any unreimbursed business expenses, things like that. Rental income, if you've owned some real estate, we need some rental income to maybe offset liabilities, help increase your buying power. Tax returns would be needed. But for the most part, if you're just salary, or maybe you get some overtime and bonuses or something, typically we're not going to need tax returns. If you're a self-employed borrower that can't qualify because your tax returns don't show enough income, I actually have a program for that specific type of buyer. We call it, it's kind of like a bank statement loan, if you will. So I just look at the last 12 months of your bank statements, personal and or business, and we can derive some income that way. I'll review your credit, your employment history, need at least 2-year history of working, or if you were in school before that, then, and we don't have a large gap of say more than a month or so, then the school can be considered your employment, even though there was no income. It just shows that you were doing something and you weren't just kind of sitting around. You do have consistency, and we can trust that you'll most likely be able to make your payments on time. Go over income, look at your assets. You can put as much money down as you want, but we have programs from anywhere from VA veteran loans or 0% down to 1% down up to 5% down. So for some minimums, of course, put as much as you'd like. Calculate your debt to income ratio. This is all kind of stuff that we do during that verified approval letter process to be able to position you to win the offer. Soft credit pulls. Okay, so this is great because if you say, hey, Jody, I know for a fact that I am not going to be able to buy anything for 3 months, but I really would like to get kind of an idea of what I qualify for right now, just kind of a rough estimate, then I can do a soft credit pull, which has no impact to your credit score. It's not an inquiry. I'm just pulling some basic information. Verifying your identity is actually the most important part. But I can do a soft credit pull and give you a pre-qualification / pre-approval, so that you have an idea of what your buying power is. If say I'm going to get a raise in April or June or whenever, I can go ahead and plug that number in and then let you know this is what you'll qualify for. Then, of course, you got to back it up with pay stub. The difference between a hard pull and a soft pull. So we do have to do a hard pull for the verified approval letter. Why? Well, because we're going to back our underwriting up with $1,000 guarantee. So we need to see the full credit file. It can't just be a soft pull where we're just verifying some basic information. We're going to put our name behind it and we're going to issue that verified letter. Then we have to have the hard pulled credit. It's good for 90 days. I'm sorry that says 60 to 90, but it's good. The hard pull is good for 90 days. VA, so veteran loan, or FHA does not allow for us to give a verified approval letter without a hard pull. So if it's a government loan like VA or FHA, then I have to do a hard pull. On a regular loan that you say you don't want me to do a hard pull, then I can do a soft pull and it's a pre-qualification letter. Understanding your credit score. So take a screenshot of this. I got this off of myfico.com. So write that down. It's an amazing resource. If you want to learn more about your credit, Credit Karma is great. And all these other, even if you're getting your credit score, if you've got a Discover card, they say every month, here's your credit score. Experian, Equifax, TransUnion, they all have their ways of helping you understand your credit as well. But the difference between them and myfico.com is that with myfico.com, you can actually pull your own mortgage score. So there's a difference between, say, Credit Karma is telling you you've got a 740, but what if I pull your credit, you got a 680? You're going to be really shocked. And a lot of times people get upset by that. But with credit, there are different models that the bureaus use to determine what score reflects the appropriate amount of risk that the lender would take. So for a mortgage, that's different than an auto score versus a credit card score versus a personal loan score. So you have different scores, and myfico.com will give you that information. Now, it does cost money. It's $39.99 a month. I pay for it because I am hyper-focused on my credit. I look at it all the time, probably too much. My score changes constantly. It's not just a once a month thing. So I like to stay on top of it. If you're about to buy a house, or for my real estate agents here, and you send your borrower to me, I'm going to want them to take a look at their credit. If they're not ready for me to do the hard pull, that's fine. But I want them to look at it to make sure that they know what's going on there as well. One of the other benefits that Rocket Mortgage provides, which I think is phenomenal, is we have a program called Credit Upgrade. So you say, Jody, I want to buy a house in next month. Okay, I'll pull your credit. And let's say it's a 550. Oh my God, we got some work here to do. We're not just going to send you off and say, hey, call us whenever you're in a better, situation. I'm going to put you through our credit upgrade program. It's free of charge. There's no cost to consumer at all. No cost to me, no cost to you. We put you with a dedicated concierge consultant who will walk you through the entire process to help you get your credit where it needs to be. Now, this is not credit fixing where you've got some valid challenges on there. We're not going to be like, well, we're just going to delete them. So it is not like that. This is legitimate. We want to help you understand your credit. to be able to put you in a better position to be successful as a homeowner. I don't know of any other lender that offers this. Perhaps they do, but for me, I think this is phenomenal. Before I started at Rocket, I was having to send people over to a credit repair group out of Roseville, who's amazing, but they're expensive, a couple $100 a month, and you have to commit to like 6 months of being with them. That's $1,200. That's a lot of money that I don't want. I'd rather you put that down on your home. So if you've got somebody that you think probably has some credit challenges right now, don't wait. Have them talk with me and let's get them hooked up with our credit upgrade. Contract to close, and I'm going really quickly. I'm so sorry, but we have only a couple of minutes left, so I'm just gonna go as quickly as I can. So contract to close. You've been with your real estate agent. You've got a contract. You home of your dreams. Now what? Well, now it's when I say the real work, not necessarily for you because you and your agent are working already, but the real work for me starts from contract to close. So the day you have that contract, you're going to want to send it over to me. I have to review it, make sure all of the information on there, all the terms are agreeable to the loan. You can't just put anything you want in a contract. You might think you can, but you can't. And some loans do have some guidelines where you can do this, you can't do that, that kind of stuff. Don't worry about any of that. Normally don't run into that issue, but I say it just because my luck would be I do a loan for one of you and we've got an issue. Maybe you've got to take something out of the contract that shouldn't be in there or something. But anyway, I will then order fees with the title agent. So I get this question every single time without fail, and I welcome it. I'm used to it. It's not a problem at all. I'm not saying what I'm about to say is not because it's annoying to me. I get it. I do it myself. But the lender does not control closing costs. Every single time I talk with someone new, they want me to send them closing costs worksheet, and I absolutely will, no problem. But the majority of the fees are third-party fees that I have no control over. Rocket Mortgage has only one fee. It's a processing and underwriting fee of $1,275. That's it. Nothing more, nothing less. Perhaps that can be lender credited depending on where rates are that day, so that there's no fee at all to Rocket. If you close your purchase with us and then I refinance you in the future, then we don't charge you that fee at all. So then there's never a fee for that particular property, no matter how many times you refinance. There's not a fee to Rocket. Everything else is third party. You've got some government recording charges. You've got transfer taxes to pay. The title company is really where the majority of the closing costs are. So there are definite costs associated with buying a home or even refinancing. Sometimes I can come in and help with the lender credit, but I'm doing that by giving a little bit higher of an interest rate. And that's the truth. That is full transparency with you guys. If you talk to a lender that says, oh, we don't do it that way, I promise you they do, because there's no way that I can pay for someone's closing costs over and over and over, transaction after transaction, without it being a huge loss. And I'll tell you that there's no title company that's going to do the transaction for free. And you're definitely not going to get the government any transfer taxes or anything like that for them to say, oh, don't worry about it. We don't need it on this transaction. So there's ways that I can help pay for it. But we just have to look at each person's individual financials to see what makes sense. Sometimes it does make sense for me to step in and do that. Sometimes it doesn't. Once I have that contract and I've ordered fees from title, I'm going to put all those fees in, and then I'm going to send you a disclosure packet. It's got 1,000 trillion pages in there, and a lot of it's going to be foreign. You've never seen anything like this before. It's all required government disclosures. Some are state specific. The biggest piece of it is the loan estimate. It gives you all the numbers. But that loan estimate is only as good as the fees are that I put in, and I can put fees in only when I've got the contract to know what those title fees are. Once you sign those disclosures and you say, hey, Jody, everything looks good, we're ready to proceed, then I'm going to get that appraisal ordered. How long does an appraisal take? Right now, our turn times are anywhere between 3 and 5 days, so pretty quick. A year or two ago, it was about 10 days, so that's improved significantly. The cost of an appraisal, it ranges, depends on the property size and property type. The smaller the property, the less expensive the appraisal. If it's something more involved, for example, a duplex, maybe I need a rent survey, so the appraiser has to do additional work, then that fee is going to be higher. The fee that the appraiser charges, Rocket does not, we're not making money off that. That goes to the appraiser. We do collect a flat $500 from everybody to get the appraisal ordered, and then whatever balance is left at to pay the appraiser is collected at closing. I am definitely not going to have time to read through all of this, but I'll just hit some of the high points here. For underwriting, if I haven't put you through a verified underwriting yet, and we're just starting from when you have a contract, it still goes really quickly. My underwriting turn times are within 24 hours, and sometimes within an hour. It depends on how much goes in at that moment in time, but it is really quickly. We go really fast here. They say rocket speed. It's not just to be cheesy. It's true. So either your loan's going to be conditionally approved or going to be suspended. Suspended just means, hey, Jody, underwriter calls me and says, hey, you know, we're missing a pay stub, or this income doesn't quite look right, or maybe I need to understand maybe how they're paid a little bit more, stuff like that. So they'll let me know. We just kind of suspend the loan for a minute. Buyer and I work together, get all the clarification that the underwriter needs. Then I submit the loan right back to them, and then they will usually conditionally approve it. Yes, loans do get declined, but I will tell you that Rocket does a really good job of turning declines into approvals. So if you've got somebody, if you're a real estate agent, you've got somebody that was declined even in the last couple of years, and maybe they lost hope, please have them call me. And if you're a buyer that maybe previously got declined, don't be afraid of that. Let's talk about it and see what we can do to work it out. Appraisal comes in, send that over to you. If you want to, review it together, we will. Usually people just say, okay, we're looking for value, or make sure there's no repairs needed, and then we're good to go. Once we have that, we've got the title, we've got your home insurance in place. If it's a condo, we got to have condo documents in some cases. We'll do a verbal verification of employment. Once that comes back, you're still working, you didn't quit your job in the middle of the transaction, which has happened, and it does from time to time. Then we'll be just about good to go. We're going to pull a gap credit report. So during a transaction, when you're buying a property, do not have your credit pulled by anybody else. Do not go buy furniture yet. Do not go buy a new car. None of that. Just do not touch your credit. I had one time, it was heartbreaking. Someone went out and bought full house full of furniture on credit. And when we pulled the gap report, we had to get all of their, add that into their liabilities. And unfortunately, their debt to income ratio went way too high, and we couldn't close. And it was really heartbreaking. But I told them, don't do that. Don't do anything before closing. And they chose to do it anyway. So that's very important. It is something that we don't want to have happen. But it is up to the buyer to keep their credit pristine during this period. I'm not going to get into the rest of that. It's important, but not as important as what's next. Closing. Close of escrow. That means that you have keys in your hand and you are now the proud owner of your new home. Once we have a final approval, we send the loan to the closer. They prepare the documents. They work closely with title. We do a lender package, and the title has their package. We send our documents over to them. Once they have the package, they will call, meaning title will call you as the buyer to set up signing. You'll sign with them. Some of it's done electronically. State of California doesn't allow everything to be signed electronically yet. So there are still some what we call wet signature documents that have to be physically signed. Usually a notary will come out to your house or wherever you want to meet them and have you sign those documents. Usually takes about 15 to 20 minutes. And then once we get that package back and we reviewed it, all signatures are correct and nothing's missing. You've wired the remainder of your down payment into the title company. The title company will take all of that money and they will disperse it out. So the title company handles all of that. We send them our wire for your loan. The title company then disperses all of the monies to the county for recording. The recording fees, the transfer taxes are paid to the county. Your real estate agents are paid their commission. Your home insurance agency receives their money for your policy. So everything is handled by the title company. Once the county calls the title and says, hey, we got the recording done and it's official, they are now the proud owners of that property legally, then you get your keys, and now you got about, a month or so before you got to start making your payments. So yeah, it's a great process here at Rocket. I've been around, like I said, for a long time, and I've seen and been at some really great places and been at some not great places. And even though I've been here a short time, I love it. I'm super pumped. I stay excited all the time. I don't know if you can tell. You guys have been with me for years now. I'm going on 4 years of doing these calls with Mike. So, and I recognize many of you on this call, you've kind of seen me through the ups and downs, and I want you to know that I'm committed, I'm happy. I love it where I'm at. We're doing some amazing things for the community, and I want to be a part of your success. I believe 2024 can be our best year yet. We're about done with first quarter. We've got 3 more to go. Call me anytime. Thank you for, your commitment to being on this call. If you're a home buyer, not an agent, and you want to talk about buying your first home or second home or third home, whatever it is, give me a call anytime. I'm around usually till about 10 o'clock every night, and I'm happy to work on weekends. I do that quite a bit. Okay, so real quick, and Mike, if you need to stop me, go ahead. I asked the question, when it comes to mortgages, what do you wish you knew more about? Let's see, Daniela, the average amount of a mortgage in this generation. So that's going to be basically location specific, right? So you've got, let's see, where I live in Oakland, what's our average price here? Maybe 900,000. If you go down to San Jose, you're probably going to be, 1.5 to 2 million. If you go to Atlanta, where I'm from, then it's, maybe 300,000 or 400,000. So it really depends on the location. Daniela, if that answers your question, if not, feel free to ask another question. Angela, owning a home means a place for memories, ability to coexist with generation of family members, asset investment, not living stacked on top of people you don't even know. Amen. Bianca, home ownership means the ultimate self-investment, dreams coming true, and independence. Yes, perfectly said. Let's see, add last minute items. That's I think your AI. Okay, well, I think that's it. I did go over a little bit, but I tried not to. Take it away, Mike. Thank you all again for having me.
Cool. All right, well, I guess we're both back. Thank you very much for that. Are there any other questions before we say goodbye? This is your chance. I don't see. Well, anyhow, thank you very much. If you're on the team, then we're going to be doing this on a somewhat regular basis. Invite people. I know a lot of you were shy about inviting people because you hadn't seen what this was like, and you thought that Jody and I might just, not do well. But now that you've seen it, bring more people, and we're going to do this so that we can get questions answered. All right.
That's right.
Thanks, everybody.
Right. Awesome. Thank you.
Bye.
Thank you, Mike. Thank you, Jody.
Bye, everybody.